All right, guys. Who brought their drum today?
Oh, I did.
You didn't bring your drum?
Yes.
We're about to beat it today.
That dividend drum.
Yeah, we're beating the dividend drum.
Why high dividend doesn't always mean high income.
Yep.
That's what we're going to be talking about today. Now, before we jump in, what are we supposed to say?
Subscribe.
Yes, subscribe to the show.
We're actually getting pretty good at that.
Yes, we are getting
We are
better.
getting pretty good.
All right, so let's talk about, we're going to be breaking down the phrase high yield, high dividend, and why I think your walls might instantly need to jump up and be a little cautious.
At least bring out that magnifying glass.
Yes. So what is high yield or dividend yield actually?
So,
Let's start there.
Yeah. So got to start at the beginning, right? So what is a dividend yield? That's your dividend payment divided by the price, and that gives you your yield. So if a stock's worth $100 and they're paying $5, your yield's 5%.
Awesome.
But what if that stock drops?
What happens then, Nikki?
Is that good or bad?
You tell us.
Well, what
I'm asking
happens
you
to the
guys.
yield? What happens
Yeah, what
to the
happens
yield
to the
if the stock?
yield?
So if it immediately drops, for easy math, if it drops to $50 a share, but they're still paying $5, now you're at a 10% yield. So that 10% looks a lot better than 5%, but that's where you need to start digging deeper and figure out why the stock went from 100 to
So
50.
hold up, let's back up just
Yeah.
for a second. Does the yield, the percentage, so when you say yield, that's percentage, the dividend is actually a dollar amount.
Correct.
Right.
Which one's more important? Does the percentage set the dollar amount, or does the dollar amount set the percentage?
Dollar
The
amount
dollar amount.
sets the percentage.
Yes, based on the
Stock price.
price. So when you see a stock that has a yield of 5 or 6 or 10 or 12, does that mean that percentage is the most important thing, or does it just represent today's value of yield?
It represents that minute's
Yes.
value, the ratio.
So what
So
is
a
stable?
yield can be very
The
volatile, right?
dividend dollar payout.
So the dividend dollar payment changes how often?
It
Potentially
grows a little bit every year.
each year if you've got the right stocks, but that's the discretion of the company.
But how often does it change typically? How many times a year?
Quarterly
Once.
or yearly? It's usually
1 to 4 times.
Yeah.
1 to 4. I was going to say.
So we're
every
talking
time-
a dividend dollar amount that is set on a stock, changes 1 to 4 times a year.
Yep.
The dividend yield changes daily.
Every
Right.
second.
Oh, yeah.
And yet, most times when you Google a stock, what do you see? The percentage.
Yes, it's always
and
the
it's
yield.
and it's like, I got 6%, or I got 4%, or I got 5%. Why don't they? And I understand it's a percentage because that's what you want to see. But doesn't that seem a little backwards?
Yep.
The most important thing to a dividend investor is the dollar amount they pay, and you got to dig
Right.
to go find it.
Sometimes it's a couple pages away to
It's
actually
super
figure out
frustrating.
what the actual income is.
Yeah, but the reality is like that yield changes minute to minute every day, however many trading days there are a year, or 270 some.
Yep.
And the reality is like we're getting all nervous.
Yep.
Nothing's changing.
Right.
The price. And it's making us have anxiety.
Yes.
But the dividend, like if you look at the vast majority of dividend stocks, they don't change that often, 1 to 4 times a year. Sometimes if you have a monthly payer, it might pay 12. Whole nother show on that one.
Yeah.
But the reality is it doesn't move that often, and yet our anxiety moves daily.
And you know what's fun? One thing that I found interesting, especially this year, as our portfolio, it's done pretty well. You have clients who are concerned because they see their yield dropping, thinking they're going to be making less income.
Yeah.
But it's because of that inverse ratio, right? As your stock price goes up, the new money that's coming in has less buying power, but your income, if you're already invested, hasn't changed.
And you know what's
Potentially it's going
Yeah.
up, but they're like, oh, I'm making less. And I'm like, are you? Let's take a look.
well, the interesting aspect of that is I would say that is a true assessment, but the opposite assessment of that is also true where a client's like, hey, I don't want to lose money. I want my money to go up. And then we rebalance the portfolio and they're like, but my income isn't skyrocketing. Yeah, because everything got more expensive.
That's right.
So you're buying less.
Well, it's one of my first meetings, and I'll never forget it because it changed my whole perspective on how I approach this. A client, you want my value to go down? I'm like, I didn't say that. I said, but now that
Yes.
you understand it, I can explain to you, yes, it is healthy and it's awesome. And that's how you build wealth fast. But until they get it, they don't get it. So you get yelled at.
Until they get it, they don't get
They
it.
don't get it. Well, it's true.
Hey, quotes by Nikki.
Quotes
right
by
there.
Nikki.
Captain
But
Obvious.
no, seriously, they want their value to stay up, but then they wonder why but then they want their yield percentage up. I'm like, wait a minute, you can't have both. So let's just look at that dividend payout and let's look at your retirement paycheck. Grow, grow, grow. But it's funny, right? They want their value high and they want that percentage high, but really it doesn't work that way.
No, and then the longer the portfolio goes up, the harder it is to grow that income.
Yes.
Because you're not taking advantage of volatility in the market because we
Right.
want volatility.
We want it.
The stock price to go down. It sounds strange. I know.
Very
It does.
counterintuitive.
But-
Everybody makes money when the market goes up. You also make money when the market goes down because you're compounding it, but you need one thing, one
Emergency
ingredient.
fund.
You need
Oh.
time.
Oh, you need time and you need time.
emergency.
But you need to have a little bit of an emergency fund so you don't need it while it's down.
Well, but
That's
if you're
the
getting,
catch.
if you're living off of your dividend,
Right.
yes, we all want an emergency.
I just have to say that
That's
because
fine.
if you need it while it's down,
Quotes
that
by Nikki.
stinks.
Everybody
Quotes
needs
by
it.
Nikki.
Yeah.
Start writing a book, guys, of all my quotes.
We're gonna do that. I'm
Yes,
sure
they're
some of those
priceless.
quotes are gonna be magical.
Magical.
You don't
Change
get
your
it unless you
life.
get it. Wait, what was that one?
You don't
You don't get it until you get
Until you get it. All
Yeah.
right. So what is a stable?
You're going to use that.
what is a stable dividend? Like, what does this mean?
I think it's going to be someone, or not think, at least how we would define it, is a company that's consistently paying a dividend. And not only are they consistently paying, but they're increasing that steadily year over year.
Mm-hmm.
And
Right.
then there's some other things that we can dive into of how their cash flow is and payout ratio and all
So,
those things.
can a stable dividend stock, a payer, have a wildly fluctuating yield?
Yes.
They all do.
I was going to say, we just talked about this. We know this.
But we're beating the drum
We're
today.
beating it. We're beating
going to
it.
beat the drum today. When you see a stock yield jump all over the place, that doesn't mean anything. It just means there's volatility in the market. I mean, look at the spring of 25, you know, where we had a new president who was like, hey, let's disrupt the tariff
Or the
industry.
global
economy.
How trade is done.
The market just had a meltdown. Crazy.
And it was daily.
It was awful.
Yeah.
I actually had lunch yesterday with a good friend who is the lead compliance investor for Wells Fargo. And he said that time he put in his top 5 biggest client panics in his entire career. And he's like, we have 500,000 clients. We have 500,000 clients. And this tariff issue was top 5 in company history, a 100-year-old company, of the most amount of sell-offs and threats from clients. I was like, yeah, I think we had one. Like, I wouldn't even put it in my top 20.
Yeah.
Like, it was a big time in the market and we had a couple clients being concerned, but I don't remember anybody
Or
going to
just
cash.
Conversation.
Yeah.
Yeah.
It wasn't scary at all. And there's where
that tether.
stability
Yeah.
comes in when you're not invested into stocks or into a portfolio designed to drive income. That tether that you were just talking about, that fear comes in. And then you have somebody like that who's 500,000 clients and they're having their top 5 most biggest sell-off in history of their company. What happened? He's like, talks about the panic and he goes, here's the crazy thing. And he like leans forward and he's so intent in how he looks at you in his eyes. And he's like, it rebounded so fast. He goes, people lost so much money. He's like, they overreacted. The market went straight down. The market went straight up and it still continues to go straight up. He's like, this is crazy. And I'm like,
You got people
yeah,
in this cash.
why'd you
positions
panic?
and Don't know when to get it back in.
Because they're not looking at stability. They're not looking at what actually pays their bank account. It's like having that bad boss and you're like, I quit. Do you need the money? Yeah. But I'm still going to quit. I don't like my boss.
Yeah.
That, a boss is the stock market. Your job is the dividend that pays you that money.
Right.
And you're going to just go sell it when you
Right.
need the income. The only reason why you sell stock isn't market panic. It's because the stock deems to be sold because they
Right.
made a change in ownership, bad decisions.
Yeah.
The stock the dividend got cut. A lot of things can go wrong, which is a reason why you might want to make a move. But if the value goes down, not necessarily enough
Especially
at all.
whenever you look at it and the overall market is moving in the same direction. Like when everybody's moving down. That's
typically like walking into a candy store.
That's it.
It's like, hey, the stock went down, nothing to do with the actual company.
Correct.
It's just because everything else went down and we're like, oh man. But our nerves are like skyrocketing.
Yep.
But the reality is, as an investor, like a Warren Buffett minded investor, when everybody's panicked, you go get greedy.
on sale.
When everybody's greedy, you go get out.
That's right.
And that when the market went down, I mean, Tesla, so many things are on crazy sale. And you look at them today and you're like, man, missed all that. Yeah, everybody panicked and jumped. Not everybody.
No.
Growth investors.
Obviously.
The ones that didn't know. But once they know, they know.
Yeah.
And they don't
Oh
jump.
man.
Quotes
Sorry,
by Nikki are
I
going
was determined
strong.
to get it in before the end of the show.
That
Once
was-
you know,
hey, that wasn't-
you know.
Once you know, and you don't jump and you don't get involved in all that crazy stuff.
That is not
But
the
until
drum.
you get it, you don't get it. Wait, what?
Well, you don't
Nikki's beating the wrong drum.
Wow, this is great.
Oh, we'll
All right,
about
so
that.
how do
don't
we
have enough time.
spot a healthy dividend stock? So you can find a lot of these in our dividend starter kit. All you got to do is comment on the show to get that. It's absolutely free, or a swipe right test for dividend income. But there's a couple things that we can list right now that are in that. What are they?
Dividend growth history, just a steady growth over time. That's one to pay attention to, at least 5 to 10 years or more.
Yeah, at least.
Just slow and boring, right? Like opposite of the
It
emotional.
should be slow and boring.
Right.
Right.
You don't want an exciting chart on dividend history.
Right.
You don't want to see this and this and this. You just want to see
the-
that.
Steady increase.
The
Yes.
complete opposite. Is what I'm saying. Yeah. One of my favorites is the cash flow. How much cash do they have on their books? How much does the company
Free
actually
cash
produce?
flow.
Free cash flow. Absolutely.
Payout ratio is another one. What's that one?
So that's really looking at, what's that debt and their debt to equity kind of ratio that's there. What are they actually paying out of their cash? We tend to try to target something that's less than 70. That's idealistic, but sometimes there's situations, whether there's been mergers, acquisitions, sell-offs, things like that, that can skew that number a little bit.
Let's land this plan. Let's beat this drum to death. What's some last comments before we close it up?
Wow, everybody's looking at me. I keep the focus on the dollar payout, not the percentage. Make sure you understand what the company's doing now and in the future. If they're doing something in the short term, don't let it make you jump to a conclusion until you truly understand, because you may have a situation like your friend was telling you about at lunch the other day.
Yeah.
There's a line that's in our notes. I actually like it so much. I'm just curious. It's like the real wealth isn't built by chasing the biggest number, so that high yield. It's built by trusting the slow and steady ones. Like it's all about this snowball compounding. The slow, slow and steady typically wins the race when it comes to investing. Time is your friend.
Yeah, and I would just say, I love this quote too. It's like true dividend freedom comes from discipline and not drama. That's just, that emotional selling that you were talking about earlier. We got to back away and be rational. That's how that wealth builds over time, and not
right.
freaking out and sell.
This has been the show of quotes. This has been a lot of fun. I've enjoyed this.
We'll make a short pamphlet of all that.
That'll be in the next.
That's
If you
right. Just
subscribe.
comment below. We'll get your quotes.
If you
out there.
subscribe, you get the quote.
That's so funny. Forget about the dividend starter kit. We're going to give away a free quote book.
That's right.
today.
Thank you, quote book.
Thanks for watching. This has been a fun show. Comment, and you're going to get the free dividend starter kit or a swipe right test. God bless.